Hello and welcome. This is the Market Wrap on BloombergQuint. Well, today we are going to take stock of how markets have shaped up through the course of the week. And we all know it's not been the best week. In fact, if you actually go and see how this week spanned out with a drop of 7.5%, this is the worst week that we have seen since the 2008 financial crisis. We have seen a sharp drop, as you can see here. That's the red line showing and indicating a decline of 7.5%. And the last time we saw a sharper drop was back in 2008. And that was when the entire globe faced that financial crisis. Let's take a look at how things panned out through the course of the week. And every single day we saw a decline coming through. Today, of course, was the sharpest of them all. But since Friday, we've clocked 6 straight days of losses coming through. And in fact, 10 out of the last 11 days were when we did see the markets come in red. Along with that, we have also seen the indices come off by as much as 8.5% from the recent peak that we saw markets make. So it certainly hasn't turned out to be a very preferable picture when it comes to the benchmark indices. But let's take a look at some of these stocks that moved. And this is, of course, your 5-day picture. And not a single stock on the NSE 500, on the NSE Nifty 50 ended or gained anything at all. A drop around 7.3%, and with the likes of Vedanta, Tata Motors, Hindalco, JSW Steel, and Tata Steel, along with M&M, we've seen severe drops. And if you notice, there are 2 sectors which stand out here, which are looking at the most in terms of declines. That is the metal sector, which of course has significant exposure to the global markets, including China, and the other one is the auto sector, and it's the same thing. Well, let's take a look at the broader markets then and see how things are panning out there. Not as bad, even though the index has come off in line with the benchmark indices. We are looking at some strength in India Cement, something we're going to address in a bit, in Diwan Housing Finance, BASF, and NLC India, among some stocks which did advance and saw some double-digit gains. But this was a market in which those gains are few and far between. And that's the reason why we've seen a lot of pressure on Future Consumer, Bliss GVS Pharma, Adani Gas, Dish TV, along with ITDC, something which has been extremely buzzing because of the volatile positions that the traders have been taking. Now, this is how markets have panned out through the course of the week. But let's also take a look at a handful of events that have actually shaped up markets. So we start off with Monday, the 24th of February, where the Reserve Bank of India infused 25,000 crores in the second long-term repo operations. Bids received were 5 times the amount on the offer. Then on Tuesday, the Reserve Bank announced 2 more auctions worth 25,000 crores each on the 2nd and the 9th of March. The State Bank of India Cards announced the price range for its much-awaited IPO. The company looks to raise around 9,000 crores to 750 to 755 rupees per share in its IPO. And the TRAI data showed that Vodafone Idea lost over 36 lakh users and Bharti Airtel lost over 11,000 in December. Jio, on the other hand, added over 82,000 customers. Also, over Tuesday and Wednesday, Gopi Kishan and Radha Kishan Damani bought 6.4% stake in India Cement through bulk deals. The US regulator issued a warning letter to Cipla's formulation plant in Goa. The facility was inspected in September last year. And on Thursday, Vodafone Idea wrote a letter to the Telecom Department and the TRAI saying it is unable to pay all its AGR dues. The telecom operator suggested setting floor prices for voice and data to raise enough revenue to repay dues and save the sector at large. The Reserve Bank of India approved the appointment of Sumant Katpalia, the next MD and CEO of IndusInd Bank, and he'll take over from Ramesh Sopti on March 24th. And meanwhile, communal clashes continued throughout the week in northeastern parts of Delhi. 39 people were killed and over 250 injured in the violence. Now, this is as far as things panned out through the course of the week. The big questions now are, can we see about a short covering, especially given the kind of intense selling pressure that we have seen as we move into next week. However, there are some who are also of the opinion that because of the fact that the selling pressure is so intense, well, we may not see a quick recovery anytime soon. It's a matter of time before we get to know which one of these scams will stand corrected. But for now, the way things are panning out on the Nifty, what we are looking at, firstly, the 12,000 levels are completely out of the window, completely out of the picture. And for now, we're looking at a lot of open interest accumulation around 11,800. Do remember, just last week, this was where we had significant accumulation in puts, and that has turned completely, and now we have accumulation in calls. And even though at 11,800 we have a considerable amount of puts being written, we're starting to see lower levels now come into play with the 11,000 mark, looking at considerable accumulation in OI. Don't forget, we're just 200 points away from the 11,000 mark, so we very well are expecting to see a lot more accumulation here on. We also have to remember this is a new series, with today being the first day as far as the new expiry is concerned. So, well, this is as far as your levels to watch out go, but what else are we keeping an eye on as we move into the next week? Well, on Monday, the 2nd of March, the SPI Cars IPO will open for subscription, and we'll also get India's manufacturing PMI data for the month of February on Wednesday. And of course, this services PMI data will be released, and on Thursday, OPEC members will begin their meeting in Vienna as the coronavirus outbreak casts a shadow on demand. And besides that, of course, we're going to wait and watch whether or not there is some amount of recovery in the benchmarks, especially given the kind of selling that we have seen. That's a wait and watch. But on that note, it's a wrap on the markets, but there's lots more lined up. Stay tuned to Bloomberg.